farms, and it's the aggregate value of all of those things. That's referred to as the tax base as well. So the valuation is just the total value of all the property in the county or the city or school, whatever jurisdiction you happen to be looking at. The rate is the tax rate that's going to be set by the Board of Supervisors or the City Council or any other tax levying authority. And the rates are expressed in terms of dollars per thousand. So if your tax rate is $30, you're going to pay $30 for every $1,000 of taxable value of your property. That's just the way it works. I mean, you could also express it in a percent, and we'll talk about that a little bit when we talk more about the rate. But for now, when you see the rate, know that it's dollars per thousand. And the last thing is the levy. And it's important to keep the levy and the rate separate, because when I say levy, I'm talking about dollars, the total amount of property taxes that you pay and that the governments collect. When I'm talking about the rate, I'll say rate. A lot of people say levy, and when they're really referring to the rate, like what's your levy this year? Wow, it's $12 or something like that. Well, when I'm talking about rate, I'll say rate, and when I'm talking about dollars, I'll talk about the levy. So those are the three things. The valuation is going to be set mostly by the assessors. There's some special property that the Department of Revenue comes out and assesses. It's not done locally by the assessors. And then, of course, the rates are set by each individual local government to generate the amount of money they need. So let's move into valuation. We're gonna, I tell you what, when we get to a new slide, you can just go all the way through and get everything that's on the page up on the screen. We don't need to go bullet by bullet, I don't think. So here we go. We're going to go through some definitions, so you know what I'm talking about when I say a specific term. Then we're going to go through the assessment timeline, because it's a rather long process, about 18 months at least. We'll talk about the different property classes and how properties get assigned to each class, and then how the assessor determines assessed value, and then importantly for the taxpayers, how we go from that assessed value to taxable value, which is the amount that the taxpayers are going to pay their tax on. And the biggest aspects of that are the rollback, which is another topic that's going to eat up a chunk of our time today, and then property tax credits or exemptions. So let's go right into the definitions. The first one on the next slide will be assessed value. An assessed value is going to be the actual value of the property. For almost all properties, it's going to be the market value, or the goal anyway is going to be to try to approximate the market value, what your property could sell for. That's true for residential, commercial, industrial property. For agricultural property, it's a little different. The assessed value has nothing at all to do with the market value, with what your farm could sell for. Instead, it's based only on the productivity of the value of that land, which is designed to estimate how much income the farm can produce, and then calculate a value based off of that. So we'll talk more about each of those different classes later on. But again, that assessed value is the first value determined by the assessor. The next definition is taxable value, and as I mentioned just a second ago, that's the value that the taxpayers actually will pay tax on, and that's the value that counties and cities will see in their budgets when they're as the taxable value that they have to work with when they're setting their budgets each year. It's never going to be more than assessed value. For a number of classes, taxable value will be equal to assessed value. For some other classes, like residential property, taxable value is going to be well less than assessed value. And we'll talk about all that coming up here shortly. Next slide for equalization. This is kind of like the Department of Revenue double-checking the work that the assessors have done around the state. Every 2 years, the Department of Revenue will go out and get its own data on what properties are selling for, and they'll compare that to what the assessor in each county has set for the value on properties in that county. And if the assessor is close enough, within like a 5% range of what the department thinks the values ought to be, then they'll just leave it alone and there'll be no equalization order. But if the assessor's off by more than 5%, then the department will issue an equalization order, which comes, I think, in about August of every other year, that in most cases will raise the assessed value from what the assessor originally had on it. Now, it's possible that the assessor could have overshot and put it at too high a number. In that case, the Department of Revenue would issue a negative equalization order. But that happens every 2 years, and it happens for the three major classes of property. commercial, residential, and agricultural. And we'll talk more about equalization in just a little bit. And then finally, the rollback is the last definition I want to get out. And the rollback is basically the percentage of your property's value that is actually subject to tax. And it applies for an entire class of property. Right now, the rollback for residential property is about 44%. And what that means is only 44% of your home's value is actually subject to tax. So when I say there's a rollback of 44%, you're only paying tax on less than half of your home's assessed value. The rollbacks are issued for an entire class of properties. So every residential property in the entire state has the same rollback of 44%. It's not done on a county-by-county basis or property-by-property. It's done on a statewide basis for the entire class of property. Okay, let's talk about the assessment timeline. In Iowa, property is only assessed every other year, and it's every odd year. As I said before, most of it done by the local assessor. You know, all of your homes, farms, most businesses are done by the local assessor. But you see there's like utility property and railroad property, that is assessed centrally by the Department of Revenue. But there's an 18-month gap between when the values are set and when taxes start to get paid. So in March, just a couple months ago, all the cities and counties set their budgets for next fiscal year. Those budgets are based on values from January 1 of 2008, and because property wasn't reassessed in 2008, those are actually the same values from January 1, 2007. So those January 1, 2007 values are going to start affecting taxes paid and county and city budgets as of July 1 of 2009. That's when the fiscal year starts. People won't pay their taxes until the end of September. If they're like most people, wait right up till September 30th to get the check in. And then they'll only pay half in September. The next half will be paid at the end of March of 2010. So you've got, in this case, because it's an even numbered year, fiscal year 2010, you've got values from assessment year 2008 that are actually from 2007 because they didn't reassess them in 2008. Now, if you had a new property built in the middle or end of 2007, that property will be reassessed on 2008. If you had a new addition like a deck or finished a basement or built a garage, any sort of new reconstruction is going to be assessed in the year that it's built. But if you've got an existing property that's no significant changes, that won't be reassessed in 2008. It'll only be 2007 and again in 2009. All of these assessed values are supposed to be tied to January 1 of the given year. So we're in the 2009 assessment year. You probably all got in the mail here just in the last month your assessment notice for the 2009 year. That is supposed to be the value of your property as of January 1, 2009. And this really only comes into play if you've got something that's in mid-construction. You know, maybe you've got a house or a property that was started built in the fall, but it's not done yet. They'll put a partial assessment on that property based on how far along it is and what they think the value is worth as of January 1, 2009. Then if the house is completed, say in the spring, next January, they'll reassess it, even though it's an even year, because there are some significant improvements, they'll reassess it as of the next January 1. These, the values that came out in the assessment rolls in April are not final yet. I think we're in the middle of the appeal process right now. So individual homeowners, property owners can appeal their assessment. After that, local level, there's another state level where either the assessor or the property owner can appeal again to the State Board of Review. There are oftentimes errors, miscalculations or just typos in the process. So these numbers won't really be final probably until December, just before the counties and cities need to get them again to start working on their budgets for next year. So it's quite a long process until we've actually got the final values for 2009. Next, let's talk about property classes. In Iowa, every property is classified. It's got some sort of a classification attached to it. because the properties are divided into classes based on their primary use.